Hello everyone, this is Zach. It is 9:42 p.m. on Sunday, about 12 hours until the market opens tomorrow in the morning, so perfect time for me to do a like a plan for tomorrow. What do we want to call these? Like a blueprint? Daily blueprint? Yeah, that sounds good. That's what I'll call it. Okay, so let's take a look. Undo this. From a daily perspective, I like to do top-down analysis. So from the daily perspective on the S&P 500 ES futures contract, you can see we've been going up, um, and we developed a high right here that lacked follow through. We came down, tested this area over here, um, did a few operations there, tried to make another high, failed, and are rotating down. So some interesting levels that we can mark here are, um, well, initially a lot of traders do like to mark the absolute highs and lows. So okay, that's not the absolute high. I guess the absolute high would be that now, and we'll mark that and call it the previous all-time high. No, we'll just call it the ATH all-time high. So we've marked the all-time high, and another style of marking support and resistance levels that I like to do is use I call it the baseline, but essentially what I'm looking for is the area in which price developed a higher low that lacked conviction. The first area where it became something like that. So a good example here is this one right here. We were selling, we were selling, we were selling. We made a low, and this was the low that needed to be breached, and the next day they couldn't do it. The next day they tried breaching that low but couldn't hold below it, and then they tested it here, and then that low became interesting. And if I draw that out, you'll see it becomes a low of interest, right? And the same thing for the top side here would be maybe that. You could say that as well. There's two of them really. Um, yeah, like we have a touch right here. I don't love it. I guess we could call it the all-time high. Um, hmm. The top side is a little bit more tricky. I will call it this one, which aligns with our all-time high as well. Perfect. Uh, let's change the color of these quickly so we can differentiate them. Black one and a blue one. Okay, so you can clearly see we're inside of balance. This is a range, and we're inside of it. If I get a volume profile and I put it right here, you'll see big distribution. Anything in the middle of this, you have to be careful how you're playing it. You're not going to get big moves until the market maker is ready, and usually they're ready once they trap a participant. So in here, most of the time, when you're in the middle, you need to play level to level, and when you're at the extremes, then you can kind of hold for larger targets if your entry is good enough, because your stop is going to be so good that you can hold for a larger move. So the interesting operation that happened on the first or second week of January is that we had this range low and we looked below it. You can see this level. They tested it, rallied, tested again, smaller rally, tested it, broke through it, but failed to hold below and came back through. Now this is called a look below and fail, a failed breakdown, whatever you want to call it. When this happens, a failed breakdown at a range extreme, so our range higher, range low would be a range extreme. When it happens at a range extreme, this means that there's a participant in here that is extremely stuck, like a breakout participant, someone who saw this level break and said, okay, now we can finally go short. And they're short, and they're short, and they're short, and eventually their position is no longer profitable. They need to get out of that position, and a short seller, when they get out of a position, becomes a buyer, and that buying activity of them stopping out will fuel the rally on top of obviously normal buyers as well. So this operation, you could call it a failed breakdown. I call it a look below and fail, or a look above and fail if it was to the top side. Uh, when this happened, when this happens, you're very, very likely to run to the other side of the range. And that's exactly what we did. And as we came back to the downside of this range again over the next month almost it took, you can see we did another look below of this baseline level. We looked below it and we were unable to hold. So there's some trap sellers down here. And it's very possible that this trap right here can be what makes us at least get to back to the middle of the range. So I wouldn't be surprised if tomorrow, which is March 3rd, will be a day where we're trying to take price at least back to 6,000. Maybe the point of control of this range, which I could define as, let's see what the point of control is, 6,060. Yeah, so that's quite an aggressive target, about 100 points away. But I wouldn't be surprised if we get that tomorrow or within the next day. Now, what I'll do is I'll use a market profile to generate some levels around there. Let me just make these only visible on this chart. Okay. Now we're looking at a volume profile and a market profile. And this is showing us only the regular trading hours from 9:30 a.m. to 4 p.m. Eastern Time. And this one, which is lowercase letters, is showing us the current pre-market. You can see there's overlapping value on the 25th, 26th, and 27th. So these 2 days, 25 and 26, there was overlapping value. So I'll turn that into like one profile, one day. And the following day, there was overlapping as value as well. They were trying to keep it balanced. And near the end of the day, they had a sell-off, which closed it down here. So that's enough overlapping value for me to also merge this day. This is quite subjective the way I'm doing it, but you'll be able to see what my thought process is. I think you guys can probably already see it. So we had overlapping value 3 days in a row, and then we got a sell-off. The next day, we opened right here. You can see the little green letter, and that's the red letter there is the close. The green one is the next open. We opened here. We oscillated around this price level, and at the end of the day, we had a large rally that brought us back into this range, right, into this balance area. Now, what did we just talk about right here? When we break away from value and we fail to hold lower and we come back inside of value, what's expected to happen for us to rotate value, right? Now, this is the same concept at play, but just on a smaller scale. This is a 1-day chart that encapsulates months of price action, and this is a market profile chart that is encapsulating only the last 3 or 4 days. So we got below value and we're unable to hold below it. We came back inside. It's very likely, now that we're back inside value, that we rotate all the way to the top of value, which would be 6,000, about 59.90 is a better level, but I'll plot out some levels in just a second. So the way really I want to plot out levels here is um, look for areas where there's peaks and valleys in the profile so that I can use them as like extreme points of um, of value and get good price location to either break away from value or rotate back into value. Um, so what I'll do is like I'll look for like cliffs. I call them ledges, where you can see the volume is tapering down here. Like as it goes up, it's lowering, it's lowering, it's lowering. But where the big cliff, where the big how do you say it? The big fall off in value is, that is kind of the areas in which I want to mark. So to the downside, a good one right here, because this is the bulk of value. I want to mark the downside one to be right here. You can see there's like a drop off there. So I'll mark it like that. And you don't really have to be too exact with these because they are zones really, not pure levels. So I'll have 37.5. We also have value area low of this microcomposite, which I might throw in. Uh, hmm. Let's just turn that into a zone. That'll be easier. Oh, come on, what am I doing? Let's make that longer, and then let's make from that to that a zone. Let's make it blue. There we go. So you can see we have a little zone we've created right here. And let's do the same thing for the upper area of this bell curve. That would be 92 and maybe like 91 to 92 and a half, 92.25. So 1.25 point zone, we can call it. There we go. All right. So we have a zone right here, a range, and anything inside of this is going to be noisy, but if we get to the extremes over here, I want to look to play back up here, and if we get to extreme here, I want to look to play back down, unless there's a lot of volume up here indicating that they're going to break away from it. Okay, so perfect. We're inside of balance, right in the middle, and I have levels to play off of on the extremes. Now let's look for breakout and breakdown targets. Um, hmm. Okay. What I'll use is I'll use the larger profile right here to my right and find peaks and valleys in that profile to define targets. So you can see there's a big gap right here. So low volume, but if we get to the extreme of low volume, which is like this little cliff, this little shelf right here, I guess I could mark 15 and I could mark this one. I'd call it 36. Maybe I'd call it 35. It doesn't really matter. 35, 36, same thing. People are too obsessed with like the micro little level. It's an area. The participants that are playing this game, that are moving the markets, that are interacting with it, that's the people whose volume actually matters do not care about 1 or 2 points. Their targets are like 200 points. So don't be fooled by one tick. Your target being one tick off doesn't really matter. Let's see. Okay, so 15, I like 15, and I like 35. Perfect. Let's see. Uh, Sorry if you guys can hear my cat meowing at the door. Okay, 35. Okay, sweet. So if we get a breakout from this, I would target 15 and 35. This is kind of like a mini value in itself. The markets are fractal, right? So on a monthly scale, on a daily, monthly scale, to on an intraday scale, to on a little 10-minute oscillation scale, the operations are the exact same. So I'll know how to interact with this when we get into that. If we do, okay, so I like those topside levels. Another level that I think will be important to mark is the point of control, the volume point of control, which basically means the price point at which um, the most amount of volume was transacted. And that can be spotted with the red, or is that orange? The orange stripe on my profile, on my volume profile. That's usually quite a big level of interest for large participants. It's something that they'll program into their algos and stuff. So I like to mark that off if it's at a relevant balance level. And let's call it 3-day bal POC. There we go. 3-day balance POC. 3-day balance point of control. Okay, so we have that, and now we need some downside targets. We have topside targets. There are more topside targets somewhere up here, but I'm not going to concern myself with those right now. You could probably lock them off somewhere here, and 6100 was a good one. But I'm not even going to concern myself with those right now. If the market gets up there, I'll redraw some more levels. At the moment, that doesn't matter. And number two, the downside levels, I really like 12 and a half, 1275. Okay, that's nice. Let's go copy and move. 1275. Okay. Oh, perfect. Then 1275 aligns with the value area high of yesterday. So let me mark that out. Call it the ledge LDG plus yesterday's value high. Very nice level. And the other one I really liked, which I discussed in my prior video, which I posted yesterday, was 60 or 59.75. So let's mark that. And you guys should be able to tell why I'm marking off this level now. It's at an extreme of value. And yeah, these aren't going far enough, are they? Okay, I'll have to mess around with those in a bit. But yeah, these look good enough for now. Again, if the market gets lower than these price levels, I will continue to find more levels, probably down here at 800, something like that. Something down here, here. Like it's not that difficult to find these levels. It just takes like a bit of experience to see the market continuously play out at them like over a long period of time. And then you start trusting the levels and playing against them. But yeah, for the most part, it's not that difficult right now to define these levels. We have a clear balance area. My idea is like, okay, if we get to 37, I want to be a buyer. If we get under 37, I am going to be slightly worried. But as long as we hold 12, we're fine. If we get under 37, hold 12, and then come back over 37, that is another like look below and fail. So it would look something like that. And if it does that, you want to buy right there a lot, because it's going to go there, right? So that is one possible scenario I'm looking for. I'm going to have to watch for that. Would I blind bid this overnight? Yeah, I might do it on some like some prop account, but I wouldn't. I don't trade overnight much, but yeah, it is a level you could watch. I wouldn't be shocked if this level holds. I'll post on my Twitter this a screenshot of these levels. And yeah, not too complicated what's gonna happen tomorrow. So take it from there. All right, guys. Peace.